it appears as though that actually could be a possibility. It's not going to announce it that way. But yeah, I mean, if you see a failure to deliver on the LBMA, I mean, look, you could argue we're already seeing that. And they say there's a shortage of trucks and manpower when they've already delivered billions and billions and billions worth of gold before they figured out what was happening of exchange for physical, which is something that's happening all the time. And then it's like, wait a second, this is much deeper than that. So yeah, it could be a pushback and an attempt to blow up the Bank of England. I'm not saying it is, but there are prevailing rumors that suggest that.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
You know, look, we see things happening in the gold and silver market now that we've never seen before. And I think it's something that we should be very cognizant of. The basic premise is that central banks and institutions and, I don't know, family offices, sovereign wealth funds, they're more concerned now about amassing real physical bullion than anything else. And the target of all of this seems to be the LBMA more than anything. We've talked at length about how the LBMA has, in essence, a float and has had a float that's been relatively stable in silver for quite some time, of about 290 million ounces that is trading off of roughly 2.9 billion ounces per day of paper trading, or 3.5 times annual global mine supply, or 10 times the amount of silver behind it. In other words, the paper to physical is 90% paper to physical. That's what the Hunt brothers saw in 1980. More paper, less physical, and so they exploited it. Well, you know, since November, when the U.S. has become a net importer of gold, quietly the same thing is happening with silver. It hasn't really been publicized quite as much, but we saw over 70 million ounces of silver leave the LBMA in January. That's an all-time monthly record, or about 20% of the float. There's only about 270 million ounces that remain that are not encumbered. So in other words, there's about 780 million ounces total, of which only 270 of those million ounces, 270 million ounces of the just under 800 million are available. The rest are encumbered, belong to ETFs or the Bank of England or who knows who. But the bottom line is that we're seeing silver come into the United States. In January, 2,586 tons have come in that we know of, which dwarfs for any single month, any month that I can ever remember seeing, at least in a very, very, very long time. And so whether we're talking about gold coming in or silver coming in, it's really the epicenter of all this is in London, and London's in trouble. You know, everyone's talking about how they were a T+1 settlement that's now gone to T+, 60, T+90. They're taking an inordinate amount of time to deliver the metal that they are required to be able to do so in just a matter of a couple of days. And everyone's been focusing on gold, but it's very important to realize that this is happening with silver as well. And so, you know, we've seen a lot of the unwinding, or you will, the hedging of the positions, covering of the positions that are naked here with all the gold coming in. Perhaps that's why we've seen gold go up so much over the last several months, is that the American bullion banks were aware of what was coming. The European banks are still very much exposed. I don't think they've even begun to do this with silver yet. So all of those people waiting for that moonshot in silver, waiting for silver to catch up to gold's performance, maybe we're right there. Because with the Basel III implementation coming into effect, which really is about gold, I think they're kind of trying to shore up their books across the board, realizing that being naked short in an environment where the world is accumulating physical, where the world has lost trust, is really very dangerous as a mud wall. And I think that's something that is being recognized by the banks here in the U.S. As much as I almost choke on saying that, Maybe they realize that this is an existential threat, and if they are going to let anyone fall on the sword, it looks like it will be those European banks that are part of the LBMA. This is getting very serious very quickly, and to see the largest withdrawal ever out of the LBMA is something that people should stand up and take notice of.
In today's news recap, silver price forecast. Silver sees upside above $33.40 on soft U.S. PPI and CPI Trump tariff fears. Silver price trades close to near the monthly high of $33.40 in North American trading hours on Thursday. The white metal strengthens as cooling United States consumer and producer inflationary pressures pave the way for the Federal Reserve, Fed, to cut interest rates. In the June policy meeting, the U.S. Producer Price Index report showed that the headline and core producer inflation decelerated at a faster than expected pace to 3.2% and 3.4%, respectively, in 12 months to February. Month-on-month headline PPI remained flat while the core figure deflated by 0.1%. On Wednesday, the U.S. headline and core consumer price index rose by 2.8% and 3.1% respectively in February, slower than their estimates and their prior releases. Last week, Fed Chair Jerome Powell stated that the restrictive monetary policy stance won't long last if the labor market unexpectedly weakens or inflation falls more than expected. The scenario of lower interest rates by the Fed bodes well for non-yielding assets such as silver. On the global front, escalating economic risks due to U.S. President Donald Trump's tariff agenda have also improved the safe haven demand of the silver price. On Wednesday, Trump confirmed that he will respond to counter tariffs from the European Union. Such a scenario would result in the EU-US trade war, which will diminish the risk appetite of investors significantly. The cautious market sentiment has also increased.
The rumor is that, yes, that is what he's trying to do. Started with Powell, and the rumor is even that they're in cahoots, Powell and Trump, even though they don't appear to be. And it started with Powell changing the interest rate structure from LIBOR to SOFR. And that was a shot across the bow. The rumor is that it's the aristocrats from the old European aristocrats that are responsible for like the color revolution that we're seeing here, or that we saw over the last 4 years. They call it a color revolution. You could argue it is. I mean, the stuff that we saw so far departed from, the American ideals that Trump is trying to restore, that they were actually behind any election in loss of integrity. I don't want to say that the election was rigged in 2016, although it had certainly the hallmarks of it not being fair. And, if I were being honest, having a beer, I might say that it certainly wasn't fair, trying to be a little bit more impartial. But the bottom line is he believes it was, and that they are behind it. And this is how he's getting back at them. And that the rumor is that the banks here in the U.S. have gone long and the banks over there are massively short. And it's a scramble. It's an existential threat. Will bring down, could very well bring down the Bank of England, could very well bring down some of those institutions. That is a rumor, and I've heard it. And I guess to a degree, if someone has to fall on the sword for all of this, I think he probably said, look, you're beginning to see this right now. The comment out of Deutsche Bank. Let me just read you this comment out of Deutsche Bank, if I can find it, because here it is right here. Who is he? George Sorolovis, I can't pronounce his name. The bank's global head of FX strategy, Forex strategy, in a note to his clients. He says the U.S. dollar may lose its traditional safe haven status as global markets adjust to a new geopolitical order, according to Deutsche Bank AG. We do not write this lightly, but the speed and scale of global shifts is so rapid, needs to be acknowledged. He goes down to say, and this is kind of what it's getting at, you notice that they say we don't need the American protection anymore, we'll do it ourselves. Well, two pillars of America's role in the world are being fundamentally challenged: the U.S. security backstop for Europe and the respect of rules-based free trade. So it appears as though that actually could be a possibility. It's not going to announce it that way. But yeah, I mean, if you see a failure to deliver on the LBMA, I mean, look, you could argue we're already seeing that. I don't care what they say. If it's a T+1 and they say there's a shortage of trucks and manpower, when they've already delivered billions and billions and billions worth of gold before they figured out what was happening, I would argue they figured out what's happening. Originally, it was the Trump tariffs and the exchanging of exchange for physical, which is something that's happening all the time. And then it's like, wait a second, this is much deeper than that. So yeah, it could be a pushback and an attempt to blow up the Bank of England. I'm not saying it is, but there is